Very good evening to all the students. So today we are going to talk about the subject global business finance. So far we have not done any sessions on this or any kind of problems or any kind of video conference in this holidays. So today I'm going to continue the part of global business finance. So before this COVID-19 pandemic, we have done some of the problems related to imports and exports. So half of the problem, I guess 4 to 5 problems have been solved in your books in the classroom. So I would like to continue from here again, coming to the next question, right? Please everybody feel free, and I request each one of you to copy these questions and answers in your notes. And if you feel any kind of problems are there or any kind of doubts are there, you can feel free to talk to me, so that I'll be helping you at any point of time after watching this video. And one more thing is that I want each one of you to copy these questions and answers in your notes, right? To start with, let us first understand the question. Equitas Holding is a wholly owned Indian subsidiary of US based company Suntec Realty. A non-consolidated balance sheet of Equitas Holding and Suntec Realty is given in thousands are as follows. So before going further, let us understand the basic thing which I have mentioned over here. Equitas Holding is a wholly owned Indian subsidiary, which means it is a branch. Equitas Holding is a branch and it is being operated in India, and it is a subsidiary means branch of US based company, which means to say that the parent company is operating in US and the branch is being operated in India. So the US based company's name is Suntec Realty. The company name is Suntec Realty. This is the parent company operating in US, and Equitas Holding operating in India, and it is an Indian based company. So the common thing which we have to understand over here is, since this Suntec Realty is being operated in US, its operating currency will be given in dollars, whereas Equitas Holding is operating in India, its operating currency is in rupees. This is common thing. Okay, coming to the given information, see, you have to just check out this information. These are the assets which have been already given over here. I won't come each one in single parts. And this is the liabilities given as per both this Suntec Realty and Equitas Holding. So one quite common thing you have to understand, Suntec Realty, see, I told it is operating in US and its operating currency is dollars, whereas Equitas Holding, it's operating in India and its operating currency is in rupees. So before beginning, we have to check out the total assets and total liabilities. So it is 13,600 of Suntec Realty and 28,600 of Equitas Holding, whereas the total liabilities of the company is matching, so it is being tallied. So which means to say that the problem is correct and we have to go further. So these are the single entries, single items of assets and liabilities that we are going to discuss further while solving the problems. Let us not waste much of our time over here. So there are some of the adjustments which have been given here. Let us look into that first. So he says that plant and equipment, right? Plant and equipment, common stock and retained earnings was acquired when the company's exchange rate was acquired when the exchange rate was at 38.20 per dollar, which means to say that these three things, plant and equipment, common stock and retained earnings. So we can see it over here, plant and equipment, common stock and retained earnings. So among these three, two are from liabilities and this is one which is an equipment. He says that this was acquired at the rate of 38.20 per dollar. So we have to make sure while converting the currencies for these three items. The second part, he says that current exchange rate is 43.20. He says that current exchange rate, I think you might have not forgot, I have given a specimen for this. For four types of there are four types to to calculate this accounting exposure, one is current rate method, and the second one is monetary and non-monetary method, third one is current and non-current rate method, and fourth one is temporal method, right? So I've given a specimen for that. So where you have to use HR and CR, that you can see that in your notes, which is already been given, right? So current rate is 43.20, which means to say that CR is 43.20. So as he has said it is CR, we have to understand this as HR. HR means historical rate, right? Okay, third point, calculate the accounting exposure of Equitas Holding. He says that we have to calculate accounting exposure by using current rate method and monetary and non-monetary method. So we have to calculate in two methods. One is current and current rate method, and monetary and non-monetary method. So before that, he says that 4th point, prepare a consolidated balance sheet of Sunteck Realty. So consolidated balance sheet. So right, why we have to do this is because one of the currency is given in rupees and the other currency is given in dollars. So we have to convert it into one single currency. Since the home country is in US, and what we have to do is, this Equitas Holding is given in rupees, this should be converted to dollars, and thereafter we have to do is we have to calculate that accounting exposure by using these two methods, that is current and monetary method, right? So let us come to the solutions part. So let us go by every single item from here. I've already done the format. So format is here. You can observe this, and then we shall move further. So this is balance sheet of Equitas Holding. Since the balance sheet of Equitas is in rupees, this is INR, Indian National Rupees, it is given in rupees, we have to convert it into USD, which means to say that it should be converted into dollars. So this thing, alright, so what we are going to do over here is, so he says that only 3 items, this is plant and equipment, common stock, and retained earnings. He says that it is 38.20, right? So that is an historical rate. First we shall write these things so that it will not get confused. So HR, so this is 38.20, right? And similarly here also common stock, it is acquired at the rate of 38.20, and retained earnings 38.20. As mentioned in the question, these three items, common stock, retained earnings, and plant and equipment, let us check. So these 3 items are acquired at the rate of 38.20, so which means to say that it is an historical rate. I mentioned it over here, right? So this is the same assets which I have already written over here, in order to not waste your time and my time too. And remaining all the assets, right, and remaining liabilities acquired at the current rate, right? So he says that current rate, how much is the current rate? As per this, it is 43.20, right? Current rate is 43.20. Similarly, it is also CR 43.20, right? So for rest of the other things, it is 43.20 other than these 3 items. Okay, this is the amount which I have written already of Equitas Holding. 8,000, 4,000, 7,000, 9,000. Total is 28,600. So if you check this question, 8,000, 4,600, 7,000, 9,000, and 28,600. The same values of this Equitas Holding has been mentioned over there in the right. Since this is given in rupees, we have to convert it into dollars. That is the basic thing what we are doing for preparing a consolidated balance sheet. In order to prepare the consolidated balance sheet, the amount should be in the same. It cannot be in different currencies. Okay, this is one quite common thing. Okay, in order to convert this rupees into dollars, which is the biggest currency over here? Is it rupees or dollars? I have already told you one single method. So whenever the currency is being converted from smallest currency to biggest currency, what you have to do is you have to multiply this, right? See, let us check. 8,000 into 43.20. It is wrong, because I have already taught you many times, whenever you are converting from weakest currency to strongest currency, what you have to do is you have to divide this amount. Let us take 8,000 divided by this CR I'm going to take, divided by 43.20. you got 185.18, or else we can write it as 185.19, right? So I'm going to write down the amount. $185.18. Similarly, we have to do it. We have to convert these rupees into dollars. So let us do it. Okay, next item, it is 4,600 divided by, see, this is CR 43.20. it is 106.48. so let us write 106.48. and next item we have to do it. It is 7,000 divided by 43.20. it is 162.03. 162.03. Similarly, we have to convert this 9,000 divided by 38.20. it comes to 235.60. you got this, right? You have to divide this 9,000 by 38.20. you will get this. So right now you have to convert this investment, but there is no money. Since there is no money, there is no need of converting. You just give a blank mark over here, right? So this is one thing. And what you have to do is you have to make a total of all this amount. 185.18 plus 106.48 plus 162.03 plus 235.60. it will come to 689.29. so let us write this 689.29, right? So you have calculated the total assets. This is called as total assets, right? Similarly, we have to convert this liabilities as well. So let us say this 12,000 should be divided by this 43.20. so 12,000 divided by 43.20 equals 277.77. so 277.77. Similarly, we have to divide the 68 by 38.20 and 10,600 by 38.20. the values are like this: 157.06 and 277.48. so when you add all these three things, the value is going to be 712.31. so this is 712 is slightly greater than this total assets. it is 689.729. so what you are going to do right now is this 712.31 minus this one, total assets 689.29. so you got 23.02. so what you have to do is 23.02. so if you deduct this 23.02 from this 712, you are going to get this value, that is 689.29, right? 689. if you deduct this 712 from 23.02, you are going to get this. so this 689.29 and 689.29 is going to be tallied. Total assets divided by total liability. So this one, what I can say is either it can be said as either gain or loss. In this condition, since the total liability is more, so what I can say is it cannot be said as gain. It is a loss. So it is a translation loss, right? So this is the balance sheet of Equitas Holding, which has been converted from rupees to dollars. Right now we have to prepare consolidated balance sheet by using these values, and we have converted this balance sheet of Equitas Holding into dollars. So let us convert this. I have already prepared a consolidated balance sheet format over here. The same items, accounts receivables, common stock, retained earnings, which is being mentioned over here. Cash, accounts receivables, inventory, plant, investment, accounts receivables, common stock, and retained. You can see this accounts receivable, the same item which has been given. So right now what you have to do is we have to prepare the consolidated balance sheet, and to prepare a consolidated balance sheet we have to add the assets and liabilities of both the companies, right? So accounts payable of Equitas and accounts payable of Sunteck Realty. So let us see the accounts payable of Equitas, which is given in dollars. Right now we converted, just now we converted. See Equitas accounts payable, just now we have converted it over here, and it is 277.77, right? So this has been converted, just now we prepared it, and let us write it over here, 277.77. and similarly common stock of this Equitas, 157.06. you can see this over here, this value is here. And next one is 277.48 of retained earnings. So for Equitas, 277.48. Similarly, we have to fill up these assets of Equitas, accounts receivables, inventory, plant and equipment, right, and investment. So right now which we have converted this into Equitas, you can see it over here, Equitas Holding. So cash is 185.18. so cash of Equitas is 185.18, and accounts receivables is 106.48. so let us fill this, accounts receivables 106.48. and inventory of Equitas, it is 162.03. Equitas 162.03. now plant and equipment of Equitas, plant and equipment is 235.60. so we are filling this 235.60. so investment in Equitas, so you don't have anything, so just give a blank mark over there, right? So this is what we have filled from, which we have filled from the Equitas after converting it, right? Just now we have prepared, no? From that we have. Now whatever is left is from Sunteck. We need not convert it because the currency is already given in dollars itself. So you can see that I have to fill this Sunteck Realty's assets and liabilities. So this has to be filled by looking at the question mark. Just take out the cash of Sunteck Realty, which is given in cash, which is given in question. Sunteck Realty cash is Sunteck Realty, and cash is 2,200, right? 2,200 cash, 2,200. so you please check out in your notes, which has been already given. Now I am going to fill it by looking at the question. 2,400 accounts receivables, inventory of Sunteck is 2,400, and plant and equipment of Sunteck is 4,600, and investment in Suntec Realty is 2000. Okay, so what you have to do right now is you have to add these two. So 185 plus 2200, right? It becomes 2385.18. You are going to add these two. Alright, similarly I'm going to show you one more thing. So what you are doing, you have to add this 106.48 and 2400. So just check this, what is the value? It is 106.48 plus 2400 equals 2506.48. 2506.48. Similarly you have to add this too. So it is going to be inventory, right? After adding 2400 and 162.03, it is going to be 2562.03, and 235 plus 4000, 235.60 plus 4600, it is going to be 4835.6. and since there is no need of adding because Equitas doesn't hold any kind of investment, we have did this. And now what we are doing, we have to add all these items. This one 2385.18 plus 2506.48 plus 2562.03 plus 4835.6 plus 2000, sorry, it is 2000, so it is going to be 14,289. It is going to be 14,289.29, right? So this is the value which we have got right now. Now we have to fill up the liabilities of Suntec Realty as per the question, which is given in already dollars, right? So if we take out the question, you are going to get accounts payable of Suntec is 1000, and common stock of Suntec Realty is 4000, and retained earnings of Suntec Realty is 8600. So sorry, if you add this 277.77 plus 1000, it is going to be 1277.77. Similarly 4000 plus 157.06, it is going to be 4157.06 plus 8600 plus 277.48, it is going to be 8877.48. Now add all these three things. If you add all these three things, it is going to be much higher or lower. So whatever comes, it can be converted, right? So 1277.77 plus 4157.06 plus, and this one 8877.48. so total is 14,312.31. so 14,312, this value is higher than the asset, right? So this cannot be higher. So what you have to do is you have to subtract this. 4,312 is higher than this asset, so minus 14,000, this one 289.29 equals 23.02. 23.02 is the difference. So now the value is 14,289.29, right? So there is a small difference, right? This 23.02 is what you have to adjust. So what you have to write for this is cumulative translation adjustment. So cumulative translation adjustment. So this is what you have to write it. So this is the adjustment, additional amount which has come out after converting currencies, right? So which is given over here, and you have prepared a consolidated balance sheet of Sunteck Realty, which has been included with both Equitas Holding and Sunteck Realty. So this is the new thing for you, preparing of this consolidated balance sheet. And coming back to this question, so here we have used this and this one as well, current exchange rate and HR as well, and we have prepared this consolidated balance sheet. Right now what we have to do is this, preparing an accounting exposure of Equitas Holding using current rate method and monetary and non-monetary method. This one we have to do. I guess, not guessing, I have already done few problems in the classroom for preparing current rate method and monetary and non-monetary method. So by using the same question, right, and there is no link between the consolidated balance sheet which we prepared earlier right now, and now what you have to do is you have to prepare the only for this one, Equitas Holding. You just you can observe this, calculate accounting exposure, right, of Equitas Holding, not Sunteck Realty, only Equitas Holding. So you have to use only Equitas Holding amount and prepare the accounting exposure, and no need of using this Sunteck Realty, right? So this value you have to do it two times because one is current rate method and second one is monetary and non-monetary method. So I have already done this kind of problems in the classroom, but still I am going to show it one more time as how to do this, because it is just like a brush up. I think you'll have forgot. Okay, now I have already prepared the format, which you all people know about this format. See, you can see the question, you can see the heading, computation of accounting exposure under current rate method, he says. Now I have written this assets and liabilities as it is, which is given in the question, okay, and the values also I have already written, because let us not drag the time. It is given in rupees, and now we have to convert it into dollars. So this is the main thing which we have to do it, right? Okay, to do this we should know which are the exchange rates we are going to use for preparing current rate. My dear friends, be very cautious, listen to these my words. To prepare this current rate method, we have to use the specimen format, which I have already given in the very first class while doing the problems related to imports and exports, for all the four types of translation exposure, like current rate method, monetary and non-monetary method, current and non-current rate method, and temporal method. Please check the format or specimen before doing this, because I have given very clearly as where you have to use the HR and where you have to use this kind of CR. So only by looking at that you are going to get it, right? So I am going to write down here directly, but please don't scold me, because there is not sufficient time. You have to check your format, which I have already given in the notes in the very first page. Okay, see, as per current rate method, all the items, all the assets are to be taken as CR. So this is given in the format, so I am copying it as it is. All the assets are CR, and accounts payable is also CR, but whereas common stock and retained earnings it cannot be HR as per your this one specimen format. Here we have to use HR, and the HR value I've already given in the question, that is going to be 38.20. please check your question once again if you want this for reference. HR 38.20. okay, so what you have to do is you have to convert this rupees into dollars. Converting this rupees into dollars, since Indian rupees is small currency when compared to dollars, what you have to do is you have to divide this 8000 by this 43.20. I am going to show it once again. So this one, 8000 divided by 43.20, 8000 divided by 43.20, the value is going to be 185.18. so just check here, 185.18 I have written. And the next item is also, it is 4600 divided by 43.20, it is 106.48, right? 106.48. so similarly you have to divide all the items, all these rupees into this current rate method and write the values. So I have the answers, I'm going to write it down to save the time. And 9000 divided by 43.20 is 208.33, and you don't have amount over here, so just give a blank. And if you add all these 4 items, the total assets is going to be 662.02. Similarly, you have to divide this 12,000 by 43.20, the value is going to be 277.77, and 6,000 divided by 38.20, it is 157.06, and 10,600 divided by 38.20, so 277.48. so if you add all these 3 things, the value is going to be 712.31, which is this one, which is this total is slightly higher than this total assets, so you have to match this. So you just come out with 662.20, and this is, since total assets, I'm going to write it for total liabilities. Right, so this is slightly bigger now. So what we have to do is this 712.31 minus this one 662.02, this is going to be 50.29. so this 50.29 is more in, this is more in liabilities, right? So this is more in liabilities. See, what you have to do is you have to write this in a bracket, only then you are going to understand it. So this is slightly higher, so this cannot be gain. So what you have to do is I'm going to remove this gain and I'm going to remain it as translational loss, right, my dear friends? It is translational loss. Okay, and now I have prepared the format. Right now the amount has been given. Now what you have to do is you have to prepare this accounting exposure. You know this formula, accounting exposure is equal to exposed assets minus exposed liability, which I have already given. So exposed assets is how much? This is exposed assets. Exposed assets is equal to this one, 662.02. it is 662.02, right? And minus exposed liability. So whenever you are going to do exposed liability, you have to use this accounts payable. So why we are going to use only this current liability, right? This might be a question for you, because and one more thing, I have already given you why we have to which one we have to take it as exposed liability. So the items which I have mentioned is like something like this. It should be current liabilities plus the long-term liabilities. So exposed liability is equal to current liability plus exposed liability. So I don't have any kind of long-term debt over here. What I'm going to have is only current liability. Only this accounts payable is a form, is one of the item which is included in current liability. So I'm using only this 277.77. so if you deduct this, you are going to get 384.25. so if you want, you can check it in the calculators, right? So let me check it once again for you all people. So it is 662.02 minus 277.77. it is 384.25. so the accounting exposure is 384.25. as per which method? You can check it as per current rate method, right? So as per the question is concerned, we have prepared accounting exposure of Equitas Holding using current rate method right now, but we have got one more method, monetary and non-monetary method, right? Let us solve that right now. So computation of accounting exposure under monetary and non-monetary. So this is one of the type of accounting exposure where we have to prepare, and as I told, the format is already here, because all the items which is mentioned in the question is written over here, the assets and the liability and the total of this, and again the liabilities and the assets part, which amount I have given. So to use this monetary and non-monetary method, please check your specimen format. As I told earlier, while solving this problem on imports and export, I have given a format in the beginning itself. Please do check it. Okay, so again, as per the format, for monetary and non-monetary method, it is going to be, cash is going to be CR, so that is 43.20, and accounts receivable is also going to be CR, that is 43.20, and plant and machinery, investment and equipment, it will be HR, right? It is an HR. Please check the format for this and don't panic as how I wrote this. Please check the format, 38.20. and investment, we don't have anything, so I'm going to write it. It's a waste of time. So how do you convert this? 8,000 divided by 43.20, so 185.18. please check your calcs, convert it. And 4,600 divided by 43.20, it is 106.48. Similarly, 7,000 divided by 38.20, please check the I'm going to show it again for you one more time. 7,000 minus this one, 38.20, it is 6,009. Sorry, I did something wrong, I guess. Let us try it again. 7,000 minus 38.20, it is 6,961.8. 6,961.8. Did I do something wrong? Let me please check it. Sorry, I did something wrong over here. Let us do it again. This is not the right value. So let us come out with the calc. It is 7,000 divided by 38.20 is 183.24. I multiplied it actually, 183.24. And here it is again, let us check, 9,000 divided by 38.20. It is 235.60. 235.60. Okay, so add all these four items, you are going to get a value of 710.51. okay, so I want this value to be in total liabilities because this is the total assets. I want this to be here as well. Okay, and so this one, accounts payable is CR is 43.20. common stock is HR, that is 38.20, and HR 38.20. so you have to divide all these 12,000 by 43.20. you are going to get 277.78, and 6,000 divided by 38.20, 157.06, and 10,600 by 38.20, that is 277.48. so let us check the total of all these three items right now. It is going to be 712.31. you have to add three items for this, right? so 712 is slightly higher than this 710. so if you deduct this 712.31 minus 710.51, it is going to be 1.8, the difference. so you have to write this in the bracket 1.8, and this is not the gain because the liability is slightly higher. It is going to be a translational loss, right? so right now what you have to prepare is accounting exposure by using accounting exposed assets and exposed liability. so exposed assets is 710.51. we have to use total assets as exposed assets, and for minus exposed liability, to use exposed liability we want a current liability plus long-term debt. Here we don't have any kind of current liability specifically. Accounts payable is a part of current liability, and we don't have long-term debt, so we are going to use only this 277.78. so this is 277.78. so if you deduct this 710 by 277.78, so you are going to get 432.73. so this is the accounting exposure which we have prepared. so for right now the problem is solved. I'm going to send this problem as well as solution in the WhatsApp by tomorrow. Please do check the question and as well as the answer, and please do copy to your notes, and whenever you feel you have a doubt, please feel free to call me. I'll be there for you, right? Thank you.